everyone, Scott here, and this week we're going to continue our discussion on risk. Mike Tyson is famous for saying everyone has a plan till they get punched in the mouth. So today we're going to talk about what happens when we get punched in the mouth when we're invested in the stock market. So specifically, we're going to talk about stock market corrections, bear markets, and state of the end, because we're going to talk about those extremes, those stock market crashes. So let's get into it. We see this all the time. We see someone that's a do-it-yourself investor who maybe is just invested in one fund, an S&P 500 index fund. Hey, I think that's a great fund. It's low cost. It has had unbelievable performance the last 10 years. But, their plan might just be, hey, I know the market's volatile, and when it drops, I know it's going to come back, so I'm just going to stick through it. But then they get punched in the mouth. 2020 happens, and all of a sudden they see their entire nest egg drop by over 30% in a month. Are they able to hang on? So today we're going to talk about how often do corrections, bear markets, and crashes happen, and how do you kind of protect against that? All right, so what are the chances that we get punched in the mouth while we're invested in the stock market? Now, if you consider a correction, which is a 10% drop, getting punched in the mouth, well, you can pretty much rely on getting punched in the mouth once every 2 years. Stock market corrections happen all the time. They're very frequent. They're really not a surprise. It's just kind of the cost of doing business when you're invested in the market. Since 1950, there have been 36 instances where the market has dropped over 10% from its highs. And in the last decade alone, there have been 5 corrections, with 2020 obviously being the most recent. 2021, we haven't had a correction. September was kind of a rough month, but it was only down about 5% in September. So only half of what a correction actually qualifies for. So, we have to be willing to go through stock market corrections, those 10% drops, even 10 to 20%. Those are just very common. That is, if we're going to be able to get stock market returns, we have to be willing to deal with 10% corrections. Those just are very frequent. Now, how about bear markets? How often do those happen? So a bear market is a 20% drop from highs. Now, bear markets don't happen near as often as corrections, but they still happen pretty often. There have been 10 bear markets since 1950. So about once every 7 years, we have to deal with that. Now, sometimes they happen more frequently in a short period of time. We had 2000 to 2002 was a bear market, and then 2008 was at least a bear market, and then we didn't have a bear market until 2020. Now, to be fair, there's been a couple instances where there have been a 19% drop. 2018, we saw a 19% drop. I believe 2015, maybe 2011, something like that, there was a 20% or a 19% drop. Now, that doesn't technically qualify as a bear market, but we got to draw the line somewhere. So, bear markets once every 7 years, we know we're going to have to deal with that. Now, what about, what's the effect when these things happen, when a correction happens, when a bear market comes along? How long do those last? What's the effect? Now, the average stock market correction sees losses of about 13%, and they last 4 to 6 months. Now, recently, we think that markets are moving a little faster. 2020, we saw the fastest correction, the fastest 30% drop in history. We also saw the fastest recovery in history. Information flows instantaneously now. Trading has gotten a lot easier. Also, fiscal policy, monetary policy just seems to move a lot faster than it used to. And so markets move a little quicker. So that 4 to 6 months, that might be a little bit outdated. Things seem to be moving a little quicker these days than they used to. So it'll be interesting to see if that trend holds. All right, so now let's talk about the extremes. You know, what happens when Mike Tyson is the one landing the haymaker, punching you in the mouth? These are stock market crashes, and honestly, this is what matters to your plan. Those corrections, those bear markets, they're gonna happen a lot. We need to have a plan for them. We need to know what we're doing, but we need to have a much more robust plan for these extremes, because honestly, this is what can make or break a successful retirement for you. Now, how often do they happen? Well, they don't happen very frequently. In the last 20 years though, there have been 3 instances of market drops over 30%. 2020, we saw a market drop of 33%. We saw a drop in 2008 of over 50%. And we also saw about a 49% drop from 2000 to 2002. So just in the last 20 years, you know, it's fresh on our memories, we've had 3 crashes. Now, going back the last 50 years before that, there were only 3 instances in those 50 years from 1950 to 2000. You know, 1987, 73 and 74, and then 68 through 70 had these stock market crashes. So infrequent, but if you make a wrong decision, if you sell at the bottom of those crashes, that can make or break the success of your retirement. So, you know, once again, if you're a do-it-yourself investor that just has all your money in an S&P 500 index fund, you know, handling those 10% drops, that's one thing, that's great. But what do you do when you see your nest egg drop by 30%? Well, 2020, you had a test and maybe you passed that test. Great job. That was a tough one. You know, market was down 30%. If you hung on, that's great. Thing is though, that was a pretty quick test. It was a month. You know, it dropped 30% in a month, and then within a couple months, it was right back to where it was. Are you going to be able to do the same thing if it drops 50%? And if that 50% drop happens over a 6-month time frame, a 9-month time frame, you know, make sure that you truly have that plan in place. Now, at Carlson, we want to plan ahead for that. We want to build your financial house in a way that protects a portion of your portfolio against that. And so that's why we believe in having a strong foundation once you hit or near retirement. If you need help with this, if you feel like maybe your plan is not built to sustain those things, if you haven't done anything to protect against getting punched in the mouth, give us a call, 844-CARLSON, or you can go check us out at carlsonfinancial.com. We have other videos, more topics at Carl's Corner. Go take a look there, and hope to see you soon. Everyone have a great week.